Nigeria's economy could shrink by as much as 8.9% in 2020 in a worst-case scenario without stimulus. This, according to Finance Minister Zainab Ahmed on Thursday. A deeper recession, which is than forecast after oil prices plunged due to the coronavirus pandemic. The finance minister told Nigeria's highest economic advisory council that the contraction could reach 4.4 in a best-case scenario without any fiscal measures. This, of course, is worse than the 3.4% contraction expected less than a month ago. Now, inflation for the month of April, which is tracked by the CPI Consumer Price Index, rose by 8 basis points from 12.26% in March to 12.34%. What caused this? What effect is this going to have on Nigerians? We're going to be speaking with the CEO of Financial Derivatives, Mr. Bismarck Rewane, to get his take on those figures. Good morning to you, Mr. Rewane. I would like to get your take, sir, on the inflation figures that we've just seen year-on-year for the month of April.
Yes, first and foremost, I think the figures came in much lower than expected. But you must understand something. The margin of error in any survey at a time of exceptional circumstances is much higher. In other words, the enumerators that went out there were wearing their masks, the markets were closed, and therefore the information that they gathered could actually be subject to so many variables, unknown factors. So first and foremost, it is true that the inflation trajectory is increasing, but it increased at a much lower rate than was expected for obvious reasons.
Thank you for that, sir. Because, in fact, when we look at Ghana's inflation, theirs had a bigger jump than Nigeria. So you're saying it's possible that the figures could have been higher?
Yeah, definitely I think they'll be higher, but the May figures will be more reflective. Don't forget the lockdown started on April 1. There were so many things that were happening. There was what they call a compression of economic activity. However, having said that, a couple of things. Anecdotally, this is empirical evidence based on surveys. Anecdotally, when you look at the price of rice, the price of bread, the price of yam, the price of all of those point to the fact that those prices increased much more than the survey reveals. But let's step back a little bit. One major event that took place just before this survey was a drop in the price of petrol from 145 to 125, and then subsequently to 123.5. Typically, there's a correlation between price of petrol and transport fares. We did not see a great sharp drop in transport fares because the transporters were all locked up anyway. But it's something that we have to bear in mind. But having said that, what we've seen is that aggregate demand compressed in this period because everybody was locked down, people were not moving, the hotels were closed, the restaurants were closed, the cafeteria were closed. But in the month of April, we also saw a compression of supply. Producers were not producing, and many things were stranded. So I think that April is more of an aberrational period. And so let us look at what will happen in May. For example, the price of bread as from June 1 is going to go up by 60%. The Bakers Association have announced that. What it means essentially is that a 300 naira loaf will now cost 450. That bread is a major component. Bread and rice are major components of the food basket. As you could see from the numbers, food inflation was 15%. So we are really in a very difficult place. And all the projections I've seen, including those of the EIU, says that inflation at the end of the year will be as high as 19 to 22%, and inflation at the middle of the year will be as high as 15%. One, because of pass-through effect of exchange rate. The Naira is trading in the parallel market anything between 455 and 460 and 465. In the I&E window is trading at 398. And in the non-deliverable forward market, it's trading as high as 500. So if this is a country where the marginal propensity to import is 0.63, in other words, for every Naira you spend, 63 kobo has a direct or indirect import content. And this is what is going to drive inflation going on forward. But don't forget that the higher your inflation, the lower the value of your currency. And you mentioned a few minutes ago about the Minister of Finance talking about it was a doomsday scenario of -8 or minus 9% GDP. When you have a GDP deterioration of contraction of minus 9%, and you have increasing inflation, that you are now back to what I discussed with you last time, the stagflation scenario. Stagflation is a very, very, very difficult economic ailment to remedy.
Thank you so much for that, sir. Very in-depth. You didn't mention, I was going to ask you about the effects with regards to food. If you could touch on the border closures and I guess what we're seeing from the lockdown, is that also going to factor in addition to the exchange rates costs as well, going forward?
Well, the border closure was already in. Nigeria closed their border before the lockdown. And therefore, this just worsened the already bad situation. But one other thing you have to think about is the fact that the border also stops food from going out. That will help bring down prices generally. So the border closure is neutral as far as this is concerned because we already closed our border before now. It is a level of enforcement that increased.
Thank you, sir. Okay, how should Nigerians view their investments in line with where inflation is now at 12.34%?
Well, typically, because under normal circumstances, if inflation is increasing, the most likely response by policymakers is to increase interest rates. If you increase interest rates, stock prices will come down. But right now, because of the general trend of palliatives and stimulants, I think that you are unlikely at the meeting of Thursday, I think. Yes, the MPC meeting. Yes. You are unlikely to see any move. So in other words, I don't think they will change anything. And therefore, if the stock market, which you have seen on a kind of rally in the last few days, will continue in that direction until earnings begin to show that some of those stock prices are overvalued. You alluded when you were talking with Chika about Dangote and MTN. MTN released the earnings. And you look at the earnings, the EBITDA level of MTN compared to the EBITDA level of Dangote and BUA, you can see a major difference. And so we are using ICT to communicate now rather than us moving physically to your studio. And so all of this is to the benefit of the telcos. So you're going to see the telcos actually, I think I like the telcos because everything is going in their direction. But for the heavy duty goods, one has to be careful at this time because this economy is going to face major contractions, major adjustments. But in the end, like I told you last time, a U-curve, it goes down, it stays down for a while, and it stays down, and then it begins to come up in 2021, towards the middle to the end of 2021. So it's not all hope is not lost. I think it's good, but the time to be cautious in the stock market is now. Having said that, I want to touch a little bit on real estate.
Yes, please.
Real estate at this point sucks. There's no question about that. Yes. Because the banks are now finding that they can offer their products through alternative channels, and you can see that they are going to have to decommission most of their branches. I don't want to use the word closure because the central bank, but they will decommission their branches. Some of them are opening sequentially, and they will decommission a lot of their people. So real estate will be negative for now. It's a lagging indicator, but this is the time to start buying real estate because the price of real estate is down. The replacement cost is far in excess of the market value, and so and delinquency rate is high because the guys who have no jobs, who are not being paid, cannot even pay their rents. So this is a sector that sucks for now, but I think this is the time to start buying. And quite frankly, if I was to be buying real estate, I'll be buying in September when it really will be at its low point, September to December. It's going to be really bad. It's going to be a bloodbath out there.
The CEO of Financial Derivatives Company Ltd, Mr. Rewane, thank you so much for your time, taking us through inflation, caution in the stock markets, and of course, your optimism on the real estate market for September. We thank you so much, sir.